What a couple weeks of earnings this was. It was a roller coaster ride. I felt like I was in a Cobra Kai show with losses and wins happening left and right. But it's a lot of fun. And I think this is the fun part for investors is to see how your companies are doing, to see how big companies are doing that are not in your portfolio that really do set the tone. So I've been going over earnings. I'm going to cover 5 more companies today, and then I'm going to wrap it up with some neat summaries that you don't want to miss, so you do want to stay tuned till the end. I am also going to show my portfolio performance at the end of this video instead of the beginning, so that way I can go over all these companies and then you can see how it affected my portfolio. So if you appreciate that transparency, as well as going over all this data related to my stocks, instead of just going over kind of highlights of things like other channels do, I'm actually being transparent and showing you the good and bad with my portfolio. If you appreciate that type of transparency, be sure to subscribe. I'd really appreciate it. And this is a family on this channel. We're all trying to get wealthy together. So give it a shot and let's get started. Let's get started with Amazon. Amazon is a company that I am very bullish on. I think right now they're kind of in a stage of figuring things out before they rocket up, and I'll explain why at the end. But after their earnings, they did fall 20%, if that gives you any indication of how they did. So Amazon had an estimated earnings per share of 22 cents. They did beat at 28 cents, and they had estimated revenue of 127.46 billion, and they came in just shy of that of 127.1 billion. So the revenue was a miss. Now overall, their sales did rise 15% in third quarter year over year. That is a great number, so that's a highlight. They did hold Prime Day this year in July instead of June, which they also did an extra one in September. So this all helped their third quarter sales. So that can kind of be looked at as a positive or negative, that these numbers were kind of propped up by that. But regardless, they have that power to do that, and it obviously provides results for this company in the form of revenue. Their online stores revenue was up 7% year over year. That's a pretty decent number. Now, Amazon Web Services is really, to me, the big part of this company, the big future growth. And so Amazon Cloud created 27% revenue growth in third quarter. Last quarter, they grew 33%, so they are slowing down a little bit. And they generated 20.5 billion in revenue when analysts expected 21.1 billion. So this company is far in first place. Microsoft is next with Azure. And so because of their size, of course, their growth is going to slow down. That's just typically how it works when things get ginormous, right? You can't keep growing at 40%, 30% plus forever. But this is still solid growth, 27%. I believe Microsoft grew 35%, but they are a lot smaller. So you have to keep that in mind. So I was still pleased, even though they had a slight miss with their Amazon Cloud business. Now, during the quarter, their Amazon Web Services did launch their second cloud data center in the United Arab Emirates. So that just is going to give them more capacity, technology, and growth in this area. So that's a good sign. Amazon did spend 19.9 billion on shipping, which is up 10% year over year, and that's mainly due to fuel costs. So that was a negative, and that's something that I expected because they're very heavy in shipping. Now their physical stores, which is their Whole Foods, Amazon Go, was up 10% year over year, their revenue. So that is, to me, a great number. Anything around 10% or higher, to me, is good growth. Advertising came in at 9.5 billion and was up 25% year over year. Yes, their advertising is killing it when other companies like Meta, Snap, and Google are slowing down. Amazon's speeding up, which shows the power of their platform and how their advertisements work. If you buy on Amazon, you look at products, the advertising is right there around it. They're suggesting other similar items, stuff like that, and that is very powerful. So I believe they have a superior advertisement bit side of their business than all the other companies, and this is the proof. While other companies are going down, they're going up. Now their Prime subscription service revenue, I'm big on subscriptions if you watch this channel because that's reoccurring revenue, especially if it's a good service and people are gonna just kind of set it and forget it. That is gold, and that was up 9% at 8.9 billion. They did raise their fee earlier this year. Now it's at $139 per year. And I do think their subscription service is very sticky. And so I just think this will continue to grow and get larger and larger. And that is something I really like about Amazon. They do have a great subscription service that people want to pay for. And so overall, Amazon had some good and some bad, but why did it drop 20%? There was one thing that caused it to drop, and that was its Q4 guidance, which came in at 140 to 148 billion, where they previously estimated for quarter four 155 billion. So a very decent drop with their revenue, and I think that's signaling a slowdown in holiday spending. Not only that, but their operating income for Q4 is expected to be between $0 and $4 billion, which shows that if it comes in at zero, those expenses are really high for this company. Now, just to give you some history with their operating income, in quarter three of 2021, it was 4.9 billion. At year end, quarter four in 2021 is 3.5 billion, and now it came in at 2.5 billion. So some slowdown with their operating income, and it could go as low as $0 or as high as 4 billion in quarter four. So I think this is what people were really focused on, but overall, I think there was nothing like that bad in my opinion. Yes, there's some slowdown, but that makes sense because inflation with their fuel costs was going to be a big hit. The fears of a recession and the inflation are causing people to pull back their spending, which means people aren't going to be buying as much stuff on Amazon. And then they do have supply chain woes, which hurt them as well. So why I think they're in kind of this period of kind of a downtrend before they kind of rocket up is because of the inflation, recession, fears, which I think we're probably already in one, but that's just my opinion, and the supply chain. This is the worst of the worst for Amazon. And after maybe a year of going through this, when things do turn around, this company will rocket up, I feel, and that's why I am going to be adding heavily over this period of this downtrend for Amazon because of the pressures of inflation, recession, supply chain issues, so on and so forth, and the strong dollar, right? That's hitting all the big global companies. And so I really do think this is still a high quality company. They're so successful in so many areas. And when things do turn around, I think this company will rocket up. So that's Amazon. Next up, and I do hold Amazon in my portfolio. So next up is one I don't hold, but it's huge and I have to report on it, and that's Apple. So Apple, being the largest company in the stock market, they had an estimated earnings per share of $1.27. They beat at $1.29. They had an estimated revenue of $88.9 billion. They came in at $90.15 billion. So they had a beat on both earnings and revenue. Now I'm going to show you this snip here. It shows you the different parts of their business and whether they beat or missed. So if they missed, I highlighted it in red. If they beat, I highlighted it in green. And I want to go through how much each sector grew, each part of their business. So their iPhone revenue, we'll see, is a miss, but it still grew 9.67% year over year. That's still a very healthy growth number in my opinion. Their Mac revenue was a beat, and it grew an impressive 25.39% year over year. Their iPad revenue was a miss, and this is kind of the real negative, is it's down 13.06% year over year, but I don't think that the iPad revenue is, to me, as important as the iPhone or other areas of their business. So though it's a negative, to me it's one of the less important ones. Now their other products, which is their Apple Watch and AirPods, did beat, and it's up 9.8% year over year, which is great. They did miss on their services revenue, which is their subscriptions, so Apple TV, Apple Music, and it was up 4.98% year over year, where last quarter it was up 12%. So it has seen a big slowdown, but I will say this. As I mentioned, subscriptions are very important when I look at a company and investing in them. I think Apple has very sticky subscriptions, just like Amazon, and I don't see this as a red flag because what they are going to be doing is actually raising the prices of their Apple TV and Apple Music coming up soon. And their product is so sticky, I doubt they'll lose very many people because of it. And so I think their numbers in the next couple quarters will be a lot higher than this 4.98% growth in their service revenue. So that to me isn't an issue. Now their gross margins did improve slightly, so overall things looked good in my opinion. Now total sales in Apple's fiscal year, which did end with this quarter of 2022, is up 8% to $394.3 billion. 8% growth year over year is fantastic. Now they did grow switchers. So switchers are people who go from Android to Apple. And I do think Apple has such a good product. In fact, I have an Apple phone, I have earpods. I don't think I have really anything else with Apple, but I love my phone. I love my earpods. I don't plan on ever switching to any other product. And I think it's more probable, and as we saw here with their report, is people switch from Android to Apple, and it's very rarely the other way around. So what I want to do, because I think this would be fun, is I'm going to pin a comment, but please let me know. One of four things. Have you only held Apple pretty much your whole life? Have you only ever held Android? Or have you switched from Apple to Android or Android to Apple? I'd be curious to see what you guys have done, but I really do think it's more so switching from Android to Apple because Apple is such a good product. And so yeah, their switchers are growing, and that shows the quality and power of Apple. Now, we did see that their iPhone revenue was a miss, but Tim Cook did say that the iPhone 14 Pro were supply constrained. So kind of gave some background to why possibly that miss happened, which, yeah. But regardless, Apple came out swinging. They did well. And this is just a high quality company. And I've said this so many times, just because a company is huge and big doesn't mean it can't keep growing. And Apple keeps proving quarter over quarter that they can provide solid growth. You look at all the companies around them in the tech sector are going down pretty massively. Apple's going up. I think it was up over 8% after these earnings. So Apple, high quality company. I'd love to add it to my portfolio one day. It's on my watch list. Maybe over this next year we'll get an opportunity. But I do have some exposure in another portfolio I have, another fund. So I'm okay with that for now, but I'd love to add Apple. Now the last three, we're going to step into first Rowe. Rowe Price, an asset management company, they had an estimated earnings per share of $1.83, and they actually beat at $1.86. They had an estimated revenue of $1.54 billion, and they did beat at $1.59 billion. So they were beat on both earnings and revenue, but the revenue did fall 18.7%, mainly due to the fall in investment advisory fees, which fell 20.5%. So to me, Rowe is very predictable of a company. And that's why I like holding this company, because when the economy doesn't do well, people aren't going to be investing as much, right? They're not going to have the funds, the money, and a lot of people freak out and actually do the opposite and they sell their investments. So a company like Rowe that manages these assets and collects fees on these services is obviously gonna go down. Their assets under management will go down. Their advisory fees will get less and less. But then when the economy does turn around and people start becoming, more bullish, investing more, this company will rocket up. So I feel now's the time to invest. And then when things turn around, that's when I let it cool off and just sit back and let this company ride. So operating expenses increased 5.8% year over year. To me, that's expected. All companies are, dealing with increased expenses. Now, their assets under management, like I was talking about, did fall 23.7% year over year to 1.23 trillion. So the biggest risk with this company is just how much of a pullback people do with investing. So that's what we will have to see over this period of economic downturn, possible recession, etc. Now, there are some good. So it does have good liquidity. Its cash and cash equivalents actually went up, even though its revenue went down, and it came in at 2.36 billion, where at the end of 2021, it was at 1.52 billion. So they're doing really good with their cash. They did repurchase 1.9 million shares of their stock, and I love that. I love when they repurchase stock instead of dilute us. Their dividend is at a very juicy 4.5% yield, though their payout ratio is a little high at 55%. I like to see that below 50, but it's right above that, so I think it's safe. I think it's very safe. And their debt has been historically low. I couldn't find a debt number on their earnings report, but it's historically been very low, which is great. So overall, Rowe, I feel now's the time to add. When the economy turns around, this will rocket up, and I think it'll prove to be a really good performer in my portfolio. Next up is VICI, the experiential REIT. I love this company. I wish I would have invested a lot more, but I will say here their estimated earnings and actual earnings per share are not what I'm going to report on. I'm going to report on their AFFO per share, which is their adjusted funds from operations. That's how you measure a REIT. Now, their AFFO per share estimate and actual, they matched at 49 cents. Now their estimated revenue was $740.13 million, and they beat that at $751.5 million. So their revenue increased, get this, 100% year over year, and that's really contributed to all their acquisitions they've done in the past 2+ years. This company acquires like no other. It's really big on growing its future, and it's starting to show the benefits of that, and that's awesome. Now its AFFO increased 82.8% year over year to $470.7 million. That's awesome to see. They're still doing a lot of acquiring and investing. So just to name one or two, they acquired Rocky Gap Casino Resort, and they're investing in Canyon Ranch, which is a wellness resort type of business. So they're just still acquiring, and we're seeing how that's working out for them. It's really boosting up their revenue. Now their dividend did increase. It did increase 8.3% year over year, and it's now at a very attractive 5% yield. Though some rates are higher, I still think VICI will, be new to the stock market, a newer company, we'll see that grow pretty massively over the next 5-10 years or so. They are issuing more stock, which I don't like, but I do see that as a commonality with REITs. Though I'd like to see that going the other trend, but that's just how it's working out with VICI. Now their debt increased slightly over from the last quarter, and it's at $14.5 billion, which I'm not worried about because this company is acquiring massively, so they're probably having to build some debt. But we're seeing the returns on their investments, and that is fantastic. So overall, I'm very happy with VICI. I do think it's a little pricey right now. It was getting close to a range I was going to buy more, but it just didn't hit it. So VICI is one I'm going to keep a close eye on because this is a company I'd love to, 3x in my portfolio, shall we say, at the very least. Last company is AbbVie. So they had an estimated earnings per share of $3.57. They actually beat at $3.66, but they did miss on revenue. Their estimated revenue was $14.91 billion, and they came in at $14.81 billion. So they did lower their full year sales for its portfolio of medical aesthetic products used in cosmetic procedures, which they have a lot of products in that area. So to lower that is not a good thing. Now, the CEO did note that after the 2008-2009 recession, their medical aesthetic products recovered rapidly. So I think he's hinting at this is the time to invest in AbbVie because when things turn around, it's going to be really positive for investors. So before we get into some of the medical aesthetic products, first I want to talk about Humira, which is an immunology treatment, and it came in at $5.56 billion in revenue, but it did miss because the estimate was $5.59 billion. So this is its biggest drug, and it brings in its most revenue, and it's now in contract negotiations as it will lose its patent protection soon. So other companies come in and make, their own brand of this type of drug, and that is where investors are kind of really closely watching. I haven't added any more because I'd rather see how this turns out. And because it can go either way. They can either hold well with their Humira revenue, or it can go down massively because people are going to switch to the cheaper brands. So now let's move to the medical aesthetic products. So Botox missed. They came in at $637 million in sales. It was estimated to come in at $640 million. Juvederm was a miss. Expected $360 million. They came in at $352 million in sales. So basically, inflation is causing people to pull back on those medical aesthetic products, but that should only be temporary, AbbVie says. So for right now, I don't plan on investing more in AbbVie. I'd like to see how this Humira thing turns out, but I'd say the fact that they're lowering their guidance for now isn't a great thing, but the CEO is confident that will turn around once the economy turns around. So there you have it. All these companies, there you see the beats, the misses highlighted in red or green. But now I want to move into something I thought would be fun. I want to compare these companies' year-to-date performance versus the S&P 500. So we'll see here the S&P 500, which I'm going to use as the benchmark, is down 19% year-to-date. So if we move to Amazon, they are down 40% year-to-date, so they are definitely trailing the S&P. Apple is down 13.9% year-to-date, so they are actually beating the S&P. T. Rowe is down 45%, so they are not beating the S&P. VICI is up 5.8%, so they are definitely beating the S&P. AbbVie is up 7.9%, so they are definitely beating the S&P 500. Microsoft is down 30.25% year to date, so they're not beating the S&P. Meta, of course, is down 70.75%. They're not even close to beating the S&P. Coca-Cola is up 2.4%, so they are beating the S&P. 3M is down 29.3%. They are not beating the S&P. Google is down 34.2%. They are not beating the S&P 500. And UPS is down 22.25%, so they are slightly trailing the S&P 500. So let's look at this chart. Here is the full enchilada of everything I've gone over these past 2 weeks of earnings, all the companies I covered. So you'll be able to, if you want to snapshot this, you can see what companies missed or beat based on their earnings or revenue. And I colored, if it's in green, it was a beat. If it's red, they missed. And then that last column is their performance compared to the S&P 500. So anything in red, they're trailing the S&P. Anything in green, they're beating the S&P 500. So we'll see Apple, VICI, AbbVie, and Coca-Cola are the ones that are beating the S&P 500. Of course, a lot of these are tech companies, which are trailing the S&P 500. So you can really see which companies are strong. And Apple, being a tech company, that's really showing something about them. So I really do recommend that you guys put together something like this. It helps you see your portfolio in a different way and analyze and strategize going forward. Now let's see how my portfolio is doing after these 2 weeks of earnings. It's actually held up okay. It's down 6.41%, so I have an unrealized loss of $3,000. So it actually did better than expected because of Amazon and Meta just having some big declines in the market. A lot of my other companies have gone up pretty significantly, which has really helped this portfolio. So quickly, we'll see Amazon is down 8.87%, and it's 7% allocation for me of my portfolio by market share. That's what the purple is. I don't hold Apple, so we'll move to T Rowe, and T Rowe is down 12.28%, and it's 3.46% allocation in my portfolio. VICI is up 11.14%, so it's doing pretty good for me, and it's 5.26% allocation of my portfolio. AbbVie has always been a strong performer. It's up 62.84%, but it's a smaller portion. It's 3% of my portfolio. Microsoft is down 2.17%, and it's a massive 13.95% of my portfolio, but I do plan on adding heavily up to a certain point. I want to get $10,000 in this company and then just kind of cool off for a while. Meta is the big ouch. It's down 54.13% for me, and it's 5.64% of my portfolio, but mind you, that's the market share, so it cost-wise, it's a decent allocation. Coca-Cola, we'll see, is up 22%. That's awesome, and it's 2.35% of my portfolio, so I wish it was more, but that's okay. 3M is down 15.08%, and it's 4% of my portfolio, so it's a decent holding. I do want to trim this someday. I think I will have that opportunity. I do think it will be in the green. And then I don't hold Google or UPS, which I did report on. Whew, so there you have it, a big 2 weeks of earnings. I hope you really enjoyed all the content I provided, all the companies I went over. Most of them were in my portfolio, but I did want to highlight a few outside of there because I thought they provided some good perspectives that are outside of my portfolio that would affect other people's portfolios. So if you appreciate all the work that went into this, all my transparency, please give my channel a shot and subscribe. Like if you enjoyed this video. And with that said, we'll see you next time on Mark Arnold's Finance. And I hope your portfolio is doing well. And I hope you guys have a great weekend, a great week, and we'll see you next time.